Hello, everyone. Matt Clark, research analyst here with Money and Markets with your what to watch on Wall Street, what to look ahead. You know, it was an interesting week on Wall Street last week. Some of the biggest companies reported quarterly earnings, which you think would dominate the market headlines with financial news and things like that, but it actually didn't. What drove financial news headlines was a company that found itself in a battle between large institutional hedge funds and retail investors, and I mean GameStop. And for 2 days, 3 days, that was the financial news of the day as retail investors using Robinhood, things like that, sparred off against large hedge funds and drove GameStop stock up by about 1,000% in just about 2 days. So very impressive. But it is what it is. Short squeezing aside, there's another big IPO and several more big companies will be reporting earnings this week. So here's what to look for in the week ahead on Wall Street. There are a few public offerings on the docket this week. Perhaps the biggest IPO of the week will come from Telus International Incorporated, which expects to price its IPO on Wednesday or Thursday. Telus International is a Canadian-based telecommunications company specializing in providing customer experience consulting and software implementation services. It's listed more than 600 company clients in the technology, games, communications, media, e-commerce, fintech, healthcare, travel, hospitality, many industries across the market. Among its listed clients are Cisco Systems, Salesforce.com, and Google Cloud. The company has about 50,000 employees in 50 locations scattered across 20 countries, but its headquarters is, I believe, in Vancouver, Canada. Now, over the last 3 years, the company has increased its top-line revenue by more than 36%. In 2018, Telus reported total revenue of about $834.6 million, but for the 9 months ending September 30th of 2020, the total revenue was already at $1.14 billion. Now, the company said it expects full-year total revenue for 2020 to be between $1.57 billion and $1.58 billion, so that's a pretty marked increase over the last 3 years. Telus's net income also jumped from $41.7 million in 2019 to $81.9 million in 2020. That's minus the fourth quarter. Its operating margin dropped from 11.2% in 2019 to just 7%. For the first 3 quarters of 2020. The company has around $139 million in cash on hand to go along with about $1.8 billion in total liabilities, according to its registration statement. Now, Telus intends to trade both on the New York Stock Exchange and the Toronto Stock Exchange. Its IPO here of interest will be for the New York Stock Exchange, of course. It will trade on the New York Stock Exchange under the ticker TIXT. It also will trade on Toronto under the same ticker. Now, it comes at a time when the Renaissance Capital IPO ETF, which trades as IPO on the exchange, is up 103% over the last 12 months compared to an increase of just 16% for the S&P 500. Now, the exchange-traded fund IPO tracks performance of IPOs across the market. Now, as far as Telus is concerned, it's planning to sell about 21.93 million shares in the IPO, and existing shareholders are going to be selling another 11.4 million. So there's going to be a total of about 33.3 million shares offered. The IPO price range is now at about between $23 and $25 per share. That could go up or down depending. It's looking to raise as much as $833 million from the IPO, which would give the company a valuation close to $7 billion. Now, of note, according to Reuters, the Telus IPO could be one of the largest in recent history in Canada. Waste management firm GLF Environmental Incorporated raised nearly $1.4 billion in its IPO in 2019. The company, Telus, said it will use the $493.9 million it plans to keep from the proceeds to pay down debt, including debt incurred to acquire other companies. It did recently acquire data annotation company Lionbridge AI for a substantial sum, so it'll use its proceeds to help pay down the debt it used to acquire companies like Lionbridge. JP Morgan and Morgan Stanley are lead book runners for the Telus IPO. Now, to take a deeper dive into quarterly earnings, it is another big week for quarterly earnings, as tons more companies will be reporting. Not nearly as big as last week, where we had a lot of the big NASDAQ and New York Stock Exchange companies report, but it will be big. And taking center stage this week is going to be pharmaceuticals. Several big pharma companies will be releasing earnings. Companies like Vertex Pharmaceuticals, Pfizer, AbbVie Incorporated, GlaxoSmithKline, Merck Incorporated Company, Bristol Myers Squibb, Sanofi, and Regeneron Pharmaceuticals will all be reporting earnings this week. Now, today, I want to take a focus on the quarterly earnings for Pfizer. Now, I talked about Pfizer in an episode of the Bull and the Bear podcast back in November. I'll leave a link in the story where you can check out what I had to say about Pfizer. And I drew some criticism then, which is fine. I'm totally all right with that because I said Pfizer was really not a stock to buy, especially for the long term. I didn't see that it would get a significant, long-standing bump from a coronavirus vaccine, and that it would probably trade relatively flat. And so far, actually, and I'm not a braggart, but so far I've actually been right. When I said it wasn't a buy, the stock was at around a little more than $36 a share. And as of the time I'm recording this, the share price is actually right around the same as what it was whenever I mentioned it in the video back in November. Now, minus a big uptick in December, whenever the vaccine was actually announced and released, the stock continues to trade relatively flat. And it means the boost in the coronavirus vaccine was really only temporary, and that's what I suggested it probably would be. It ticked up, and then it went right back down again. So in terms of its earnings, though, I suspect, and as does Wall Street, that the quarterly earnings for Pfizer will pretty much be less than it was in the previous 4 quarters. The company did have an earnings beat in the third quarter after reporting earnings per share of 72 cents, but the beat wasn't that much. The Wall Street analyst projected earnings of 71.7139 per share. So it only beat it by just scant tenths of a cent. And now its revenue came in at $12.13 billion. That was much less than the analyst projections of $12.31 billion. Now, for the fourth quarter, analysts are projecting earnings per share of around 54 cents per share on revenue of $12.97 billion. The revenue increase is going to be mostly due to the coronavirus vaccine it rolled out in the United States. However, since then, there are other vaccines from different companies that have come to the market. Moderna specifically has a vaccine that's now available, and there are actually 3 more companies that have their vaccines in phase 3 clinical trials, which means they're very close to being released. So, like I said, Pfizer wasn't going to be the only player on the market, and they weren't going to be the only ones who were going to see any type of boom because of the coronavirus vaccine. And so far, that has been correct. So what does it all mean? Well, when I recorded the podcast video about Pfizer, I said that because Pfizer wasn't going to be the only player in the game, its gains would be short-lived, and that's exactly what happened. I think Wall Street analysts are pretty spot on with their projections for Pfizer's quarterly earnings. Revenue is going to be up, of course, but the earnings are going to be pretty much less than the last 4 quarters, and I still don't think Pfizer's a strong buy, especially long-term for your portfolio. Now, in looking at our data dump that's coming out this week, the Institute of Supply Management, or ISM, will release its monthly Purchase Managers Index for the month of January on Monday. The index is compiled from a survey of purchasing and supply executives from around more than 400 companies industrially and measures the outlook for American manufacturing. For December, the index reading blew past projections as purchase managers felt pretty strongly about a rise in the industry. January projections are for an index reading of 60, which is slightly lower than the 60.7 registered in December. ISM will follow up that report with a separate non-manufacturing purchase managers index on Wednesday. The difference, of course, is obvious. Wednesday's index factors out all of manufacturing and only it looks at business activity in all other sectors. Taking out manufacturing, and you can see by the graphic here that the index has been relatively flat since June of 2020. The index, while indicating some growth, which a reading of 50 or above is considered growth, has been between 56 and 57 the entire second half of 2020. Forecasts indicate the index will stay at that range for the month of January, meaning only a slight growth in confidence. Now, on Thursday, investors and economists are going to pay attention to the Bureau of Labor Statistics quarterly labor cost report. The report measures annualized change in the price businesses pay for labor and is a pretty strong indicator of consumer inflation. Thursday will be a preliminary look at the report before its full release the first week of February. The third quarter of 2020 saw a 6.6% drop in labor costs, the first decline since 2019. Now, the third quarter was a strong lens into the effect of the coronavirus pandemic and what it had on labor across the country. Analysts are projecting that labor costs will increase by about 3.4%, or very slight, in the fourth quarter of 2020. Now, like I said, there are a plethora, if you will, of earnings that will be released this week. Here's some of the earnings to look at. On Monday, Vertex Pharmaceuticals and Otis Worldwide will be amongst those reporting earnings on Monday. On Tuesday, we will get some big players here as Amazon.com, Alphabet, or Google, the parent company of Google, Pfizer, ExxonMobil, and ConocoPhillips will all be releasing earnings on Tuesday. So Tuesday could be a day to watch. Wednesday, also another fairly significant day. We'll have PayPal Holdings Incorporated, AbbVie Incorporated, GlaxoSmithKline, Spotify Technology, and Scott's Miracle-Gro, which is one of my members of the cannabis watch list that you can check out on moneyandmarkets.com. And then on Thursday, we've got Merck and Company, Bristol-Myers Squibb, Cigna, and Activision Blizzard. Activision Blizzard is a bit of note because recently Chief Investment Strategist Adam O'Dell had something to say about that in one of his paid services, and you can check that out as well. On Friday, Sanofi, as well as Regeneron Pharmaceuticals will be reporting their earnings to close out the week. So big week in terms of earnings. We've got an IPO. We've got several big things on the horizon. Plus, who knows what's going to happen with short squeezing and see how long that's going to take as stocks like GameStop and AMC movie theaters and stocks like that continue to move up as retail investors are kind of waging a bit of an online war through Reddit with more institutional investors. So it'd be interesting to watch how all that plays out as we head into the next week. So that's all for me as we head into next week. Until next time, everyone, I'm research analyst Matt Clark, your host for The Bull and the Bear, as well as the Marijuana Market Update, and of course, this Week Ahead video. Until next time, everyone, safe trading.